Ladies and gentlemen, Kim here. Welcome to the market update. Hope you guys had a good day trading today. Market is up a little bit here on the S&P. It looks like Nasdaq is pretty much flat there, slightly red. Dow's up, semiconductor down. It's another one of those days where you get some mixed days here. We got Russell 2000 slightly up, transport slightly down. Banks though, we are seeing some move there today, 1.2% on the banks. Energy up a little bit, biotech 1%, same with the emerging market. Gold, silver, miners up a little bit, down a little bit. Oil down, up 1%. Treasury bond down, VIX is down. Looks like Grayscale Bitcoin also got hit today. So tonight, on this weekend analysis, we're going to be sticking with these tickers. These all coming up right now. Let's go to the 65-minute chart and follow up with what we've been talking about this week. So you can see, most of the battle was fought pretty much. Once we saw that definitive higher low there in the midterm, which we've been talking about, and we talked about last weekend analysis right here. This is kind of what we talked about. There's that impressive resume guy. Remember that midterm moving average, and that's kind of what we talked. And we have to give benefit of the doubt because, you will see these kind of shenanigans in the short term. But that's kind of what I mean when I say benefit of the doubt, meaning when there's a decline, there's likely we're going to see some of these reversals in these important pivotal level, which at this point, last week was that midterm moving average, because you see that was the level we found support, strong support, I might add, previously, right? So this is not a coincidence. This is not a mistake. This is not a random occurrence. Market do things over and over again, right? Because that's how most people react to it. The market has been conditioning majority of our retail traders and investors to buy after certain decline. It's not that everybody's looking at the same exact moving average. Everybody's looking at like Fibonacci. No, nobody's looking at these things. Most people are just they're trading, getting into a position whenever they feel like buying, right? So they kind of like, oh my God, last time we saw like several percent down day or a couple down days and I bought some, I made some money. So they're doing it over and over again. That's why these levels are getting respected over and over again. So that most battle was fought, and then actually obviously when the gap was open there and then gap never got filled, you know what happens when the gap doesn't get filled. It favors the buyers, and then the trend shifted when that short-term moving average was no longer favoring the bears, right? So you can see that right here, resistance, slight resistance there. That was that battle going on right there, and then it became a support, and support. Another gap up and another gap up today. So we have to continue to give benefit of the doubt to the buyers. You can see that my short-term moving average is rising. My short-term midterm, it was a little bit of a sideways move here, but definitely looks like it's rising. My midterm has always been rising, never once breached below that short midterm moving at that impressive guy right here, below that for a while. Let's check out the oscillator and see for like overbought at all. Well, this is what we talked about a couple days ago, and pretty much this entire week. When we get to overbought, that doesn't always mean the market, that's the top. You see that the market can grind and grind and grind and grind and grind. It can grind for days and weeks. This is why it is a futile attempt. You trying to call top, you trying to make money, trying to short this market because you missed the dip. That is the most difficult way to make money, because you will lose money 9 out of 10 times, right? You see that. So this is what we talked about couple days ago. We're overbought, but we still need to give benefit of the doubt to the buyers. We saw just a little bit of correcting through time happen here, and you see that oscillator corrected just a little bit, reset it a little bit, and then gotten back up, and with that, market made a move here, and that's exactly what we are anticipating this week. And so again, opened up another gap there. So remember, there's that island gap and there's a continuation gap. Looking at things in the midterm, we got this gap continuation, we got another gap today. So now oscillator is hitting that near that overbought level. See, the thing about it is, these prices can move sideways all day, man. That's all they can do this all day, every day, right? Correcting through time, and then make a move next day on a gap. But we gap up and then move sideways all day. We gap up, move sideways all day, and it could grind like this. And that's the most brutal, sentiment that bears hate to see. I mean, if you haven't been already tired of, trying to call top this entire and since COVID last year, I don't know why you would continue, continue to try to do the same thing. You have to stick with the trend. It's not like market doesn't give us an opportunity, because if you look at it, market has been giving us that opportunity here. I mean, look at this, going all the way to like February. Look at all these dips that market is giving you that kind of opportunity, right? And what happens is when the market is up, it's so slow to come back down. You have a plenty of time, make assessment, readjust, and everything else. But when the market, reverses back up after correction, you don't have enough time. It gaps up so fast, it reverses up so fast, and that's what you will see in a bull market. It reverses up so fast with that V-shaped reversal. So if you're short, if you flinch a couple times, it's already a new all-time highs. You see what I'm saying? So I want to continue to give benefit of the doubt to the buyers going into next week. Should there be any kind of slide, you got this gap, it's going to provide cushion. We got the short-term moving average residing at 424. Let's just flip back to the daily chart here and kind of look at things more of a intermediate to primary term here now. So we talked about this level right here last week on the weekend analysis. You can see that it's a pretty obvious level, right? And so sometimes the market do respect some of these obvious supports. Sometimes it likes to create shenanigans. For now, as of today, it looks like it's been bouncing how many days now? 1, 2, 3, 4, 5 days. So this entire week, we've been seeing the bullish rally. It doesn't look like, as of today, it doesn't really seem like there isn't going to be a shenanigan. But sometimes, market can give you something like this, right? Rally for a week, pull back, and then goes back up or something like this. So again, we've been dealing with this kind of a market structure and environment. So it's pretty lethargic and it's pretty choppy market. It is extremely difficult to trying to profit in this market, swinging back and forth, getting in and out. You'll burn your hedges, trying to go short and long, short, long. You know what I'm saying? Market did move from, spider moved from 350 to, 430 now almost. And if you looked at your account and you haven't made anything, you know what I mean? That's just, you're missing out opportunity. Sure, like market didn't give you huge, fast rallies. Market doesn't always give us that. You have to learn to adapt to the market environment. And, looking at just this year, 2021, best way to, accumulate gains in this market is to be a long-term investor, is to hold things long-term. Because, we've been having a lot of these mixed days where certain stocks go up, certain stocks flat, certain stocks decline, right? Same thing happening with sectors. Certain sectors go up, certain sectors sideways, certain sectors decline. What I've noticed this week, I also tweeted out that Hyperstocks that's been coming down 40-50%, those Hyperstocks been going back up, right? What I mean by when I say Hyperstocks, so I tweeted this out. This was back in June 24th. I've noticed that a lot of these Hyperstocks been making a move, right? Hyperstocks been making a move, helping the overall market to be propped up. So, a lot of people are saying like, this market is so heated to the upside. I mean, how high can you go? How high can this market go? But think about this though. A lot of these Hyperstocks that made a huge rallies throughout 2020, they've came down quite a bit. Like something like Zoom, experienced like 40, 50, some of them even 60% corrections. A lot of times when you see those kind of numbers of corrections, usually that kind of stuff happens in a bear market or 25% corrections. Keep in mind, S&P 500, what are we seeing? Nothing, right? These are about 2%, 3%, 2%, barely nothing. And you see that some of these hyper stocks are making, you know what I mean, came down 40, 50, 60%. But I mean, we have to be fair about that because, they did make some incredible returns 2020 during COVID. So what I'm saying is now that hyper stocks are getting ready to make a move, can you imagine where the market would be? Something like Amazon haven't moved the entire year, right? Apple haven't moved. So what about those stocks? What are some of these leaders that have been lagging this year? What about when they start to move? Where the market could be? So these are the things, think about without just calling the top every single day. And market could continue. This is the way. There's a reason why we're not seeing every single stock coming down, but only certain sectors coming down. Market is continue to rotate funds. That way, market can be propped up. Look at this Zoom here, like 40, 56% finally making a move. We got Spotify 40, 50% finally making a move here. It looks like a little trap right there, right? People put a place their stop, right? Even long-term investors getting really scared right here, right? You get stopped out, it moves up, right? We got DDOG, right? Moving sideways, correcting through time, but some big fluctuations making a move, propping up the market. We got Peloton, was that 50% correction, right? I mean, it had a huge move done during COVID, right? Look at the inverted head and shoulders here, neckline making a move. We got crowd, huge move during COVID, correcting through time with some big fluctuations though. Made new all-time highs here, making a move, right? Let's continue here. So we got SHAK, right? We got that support. We got the, pivot, making a move here. We got TTD, the trade desk, right? Came down, 40% or so? Look at that, was like 10, 20% when I tweeted it out. And I own all of these guys. Zillow made a huge move, 40% or so, potentially finding some little double bottom here, right? We got Fiverr getting up. So you see, even though S&P is pretty, extended, if you know where to look, you can still find opportunities, right? Because I wasn't in all of these guys. I was able to accumulate these names, some of these lows here. Some of them I got in maybe a little early, and then I bought more. You know what I mean? So something like Crowd, something like SHAK, I bought near the lows there. So you can see just because the market itself is extended, the overall market, the indices, there's always other stocks you can get into. Zillow, I recently got in. Actually, I was long Zillow somewhere here, and then I added more here, right? We got Fiverr. I've been adding here. DOCU, I think I was long somewhere here, and then I talked about trap there. Obviously, I didn't close out my position, but I was wondering when that, when this happened, when this thing broke below this, I was like, I think a lot of people are gonna start freaking out here. That became the proverbial bottom there. PayPal, we got INTU. So you see all these stocks, the COVID stocks, the hype. That's what I mean when I say hyper stocks. I don't mean penny stocks such as GameStop or AMC. I mean hyper stocks, the COVID stocks that made a huge move last year. They're starting to make a move. That's been kind of helping the S&P to make that rally there. Let's go to Nasdaq. So I mean, again, there isn't a whole lot of talk about. We just want to continue to give benefit of the doubt to the buyers, but let's reflect on these things because you want to understand these things. So next time when you see opportunity, you don't just miss that opportunity. So I remember when I was analyzing this. And when I was analyzing this Nasdaq back in right here, this was right there. You guys remember back in late October, right? A lot of people, even I remember on YouTube comments and Twitter replies, people are saying, that's a double top, man. This thing is too elevated. It's up too much. It's overbought. We're going to need, this going to come back down to like 215, maybe even remember that? People are saying retest the March lows, all of that stuff. Look where we're at. Right? It was trading about people thought that it was up too much here. Now at 349. And you think that, look, this is what I was saying. This was October 2nd, right? I'm talking about, okay, this thing made a move. And what I was saying is that, you know what? Market doesn't have to come down and correct severely. It can correct through time by, you know what I'm saying, consolidating and then go up again, right? That's a lot of times it happens because when most people think it's up too much, it must come down, market will fool the majority, and that's exactly what the market has done. Where are we now? 350, right? Look at this, 350, 60s right here. We got a little up and down couple times, made a move here, right? So you can see how market, we respected the, you know, that trend, that rising pivot. This is why these levels are important, right? Just because I draw a couple line, man, do you really think you're gonna be able to see the future? See, ignorant people who doesn't understand how the market works will say those stupid things and always get frustrated, irritated, trying to get out of the market, always trying to time the market, right? And then you realize Qs were trading at like 250s and you thought this thing was going to 200, now it's at 350s, right? They were up and downs because up and downs given, right? You cannot have a stock market without up and down movement. So you can see some up and downs, rally here, up and down, another rally. We even talked about last couple months that I look at this as a digestion, consolidation, resting pattern, right? And every time when you see these peaks, there's so many people always so quick to call it a double top. Well, this was a double top then. What happened to that double top? Nothing. Was this a double top? What happened to double top? Nothing, right? So you want to stick with the trend. That's why you want to give benefit of the doubt to the buyers, right? And you can see this was also that obvious support. I actually thought maybe would there be some sort of shenanigan, maybe one more trap before going higher. What happened to trap one? Let me see. What happened to that? This one right here, DOCU. This one. So I mean, I didn't see a whole lot this year. I didn't see this kind of trap a lot this year. But usually I see quite a bit. But you see how these kind of stuff, I see this happening all the time, especially when you're in a bull market, like, you know, pretty prolonged bull market we've been in this bull market, you know, since COVID. So it's been, you know, just maybe a year and several months or so. But when you're in this kind of raging bull market, you tend to see these kind of traps quite a bit, where everybody's drawing lines, everybody's looking at these levels, and it will come down. Inevitably, everybody panics, and that becomes a proverbial bottom, and then shoots up like crazy. Like this thing hasn't gone anywhere. Think about this. It hasn't gone anywhere. I mean, you can, but that's what I call consolidating through time. That's exactly what you're looking for. If you went long here and here and here, right? This is what you're looking for. And then maybe you even buy more and then you can continue to ride it to the upside. And this is kind of like what's been happening on the Nasdaq, right? We saw a big move to the upside, right? And then consolidate, big move, consolidate, maybe another big move. So there isn't a whole lot to analyze. Just the market's been so choppy and lethargic, but market's been going up. Market's been going up. Market's been gaining momentum. You know, S&P, we're almost half year now, 13% year to date with Nasdaq 11%. Some of the other indices did much better. You can see that banks up 23% already year to date. Look at semiconductor 16, small caps 18, transport 19. Right? So you can see that, you know what I mean, S&P could very well do a 20-25% year end of the year. You know what I mean? Nasdaq could catch up later, right? So let's continue to give benefit of the doubt. The trend is up. I cannot call top. I don't know where the top is. None of us do. But you know what I mean? I just not going to call top here. I'm not going to start saying market is going to crash down or we're going to see some meaningful 20% correction because everybody's been looking for that for a year and a half now. And so we got to stick with the trend until market gives us certain signal that potentially, you know what I'm saying, there's a little bit more warning signal. But I don't see anything like that at this point. Let's go to GDX here. So GDX is... This is an awkward level. It's because, you know, we did kind of cultivate that equal highs and then it came down pretty harsh. And so this is a level that it really needs to hold. If this thing start coming down to the lows here,
things gonna get really hectic for the bulls, because you see this rally here. You want to keep that momentum going. So this has to be some sort of higher low. So we gotta start doing something like this for this rally momentum to continue. But if this thing start coming down to make new low, either new lows or equal lows, this entire rally gonna be meaningless pretty much. So we're kind of at that juncture, and you can see just this week it hasn't done anything. So we're just kind of at that juncture where gold and silver miners' fate is going to be going into remainder of this year. So we'll have to kind of watch and see how it's going to play out next coming week. As I look at my daily chart and my other screens here, it is extremely oversold. So I could see there's going to be some kind of an oversold bounce this coming week. But you see there's a gap here. That gap is gonna make things hectic. The best case scenario, fill the gap, come back down, and then do this, or get up and then let's put a gap there. Get up. Right? Get up and then gap it up, turn it into island top. That would be the best case scenario, and really speed up the process and taking out this resistance here, that neckline, and make this into an inverted head and shoulders formation. Let's go to Grayscale Bitcoin, and we'll end the video with this. So, I've been talking about how Grayscale Bitcoin is benefit of the doubt goes to bears, and I've been talking about this for months now. You can see we're almost down 60% from the peak now. So you can see this definitely, you always like to hear, these people coming out saying that, oh my God, I put my entire life savings on Dogecoin, and my 100,000 is $1 million. Yay! You drool over these people trying to change your life overnight. Yeah, do that, dude. Just do that, and you know what I mean. Gamble your money away, YOLO your life, and see if you hit. Because I bet millions of people have done that, and then maybe there's one or two people made it, and then remain 98, 99% of people, they all lost their entire life. Yeah, you want to YOLO with your life savings and change your life overnight? Go ahead and gamble away your life away. I have no inclination to get into Bitcoin at this point. You know what I mean? I mean, if you really want to go buy in Bitcoin, I guess I have to say, okay, yeah, that right here, definitely better than here. Definitely, because we did see 60%. That doesn't mean you cannot go any lower. For me, I don't have any inclination. Looks like this gap is also filled here. Yep, so this gap got filled. This gap right here just got filled, and looks like that's where we saw some support. A lot of these gaps, there's a lot of gaps here, all got filled. Every time in the gap got filled, you can see that we saw little bounces. That's where gap got filled. There's another gap here and here. That's the island gap, and so I don't know. Benefit of the doubt goes to the sellers. I've been promoting this special research I've done for my members. I just released it a couple days ago, which I believe in my research, in my findings, in my analysis, that a lot of people think that we are in that 2000 .com bubble top, and the market, it is ready to crash down. In my research, in my findings, and I'm not talking about certain stocks or anything. I'm talking about overall market. We're talking Nasdaq, we're talking S&P, we're talking Dow, we're talking overall market, right? And so, as far as the overall market is concerned, we're nowhere near .com bubble top that we've seen in late 1990s. If anything, we're in the early 1990s before a huge bubble that is huge, explosive, bullish run that is similar to what we've seen in 1990s, and it's going to impact the entire market. But certain sector is going to benefit from this move more than others, which I talk about in this research report. It's a video research report, but I talk about my fundamental findings, fundamental analysis, which is also affirmed by technical analysis, also giving targets on how many years we will see this bubble lasting, and why this bubble is going to happen, right? So if you want to take advantage of this, this research report, obviously, a lot of people have asked me if they can get this report by itself. I'm not gonna sell that by itself. Even if I do, it will be same price as 1 month of my investor subscription service fee for 1 month. So I think it's okay if you guys want to do this. I think a lot of people have done this where just sign up for 1 month and you can cancel it right away. And that way, you know, not only you're going to get the special report that I've just released, but you would also get some other reports such as this, and maybe gain some video lesson regarding how the long term, the primary and the macro and secular, which you hear me talk about so much in these videos, right? But I don't have time to go through all this, and you can you know listen, you can learn about that so you can fully understand. Because if you understand a big picture, man, I mean you are not gonna be start freaking out just because there's like 0.5% down day. Then obviously you're gonna kind of get to see what are the positions I'm currently holding, where am I investing, and things like that. And maybe in a month or so, if I'm getting to any new trades or if I'm adding into my current trades, you would also get some of the stock picks if there's availability. Because I don't day trade, right? So I don't swing trade. So there isn't gonna be always availability. But if I see an opportunity, but when I get into it, just I'm a position trader and a long-term investor, as a lot of people know. So long-term investor meaning I'm gonna be buying these stocks, right? I'm gonna be buying these stocks or some ETFs or something like that, and I'm gonna be holding maybe year, 2 years, or 3 years, and I'm gonna fully ride that primary uptrend. But I also do ETFs position trading. Those are I'm gonna be trading maybe double shares, triple shares, something like that. And if you get into Premier and VIP, there will be options trading with ETFs position trading, which is going to be options trading, which I'm going to be using options instruments to trade for 3 months to 6 months to fully optimize, to fully ride that rally. Right, so you can definitely take advantage of this, and again, you can get all those as extra. But if this is what you really, I think it's worth it. To be honest with you, I think it's worth it to get this report, so then at least you get a good idea of what market, where we might be heading in the next 5-10 years or more, right? And so maybe you get a good idea of that. But if you've been thinking about joining Traders Club, and so then I do have June 2021 special invitation for annual memberships. So we got Investor Premium VIP. If you kind of click on these links, you'll get an extra 10% for this, extra 15% and 50% off. And keep in mind though, these regular price yearlies are already 25 to 30% off. So that's on top of that 10%. So that's almost like 40%. That's almost like 40, 50% off going to these links here to take advantage of that. But then again, if you don't want to do any of those things, just sign up for 1 month and you can cancel it right away, so you don't have to think about it. And then you just get the report, and then you can get some extra stuff. And then at least that way you get a good idea of potentially what could be happening, right? I don't presume to know everything. I'm not guaranteeing that this is exactly what's going to happen, but I believe that it's profound. It's very, very compelling. And as you watch this research, you realize this is probably something that you're never going to hear from anybody else. You know what I mean? So I promise you're not going to be disappointed in this research report. You're not going to be like, oh my God, I wasted my money.